better than your currency. Splurging millions, buying houses like Monopoly. Fucking 9 to 5, man, the money is a joke to me. Buying cryptocurrency, my money in the privacy. I make it rain dollars, they watch me disappear. I'm so fly, man, I'ma need some land.
Hey guys and girls, welcome to this week's episode of the B.Invested Birchy podcast. I'm your host, Nathan Birchy, and this is a show unraveling the truth to the facade of the 21st century. We're now exiting the matrix and waking up to motherfucking reality. Today, we have a bit of a different set here. We've got a nice podcast studio that we've been able to borrow until my one is completely set up. I've had the acoustic guys putting getting all the sounding right and all that sort of stuff. So the B.Invested podcast studio will be up and live shortly, but I have got a proper podcast studio today, and I appreciate the guys for letting us use this one. So today I want to talk about investing in a property and taking advantage of the markets if we are traveling through an economic challenging time. So, many times in history, there's been good markets and there have been bad markets, and a lot of people get fearful. A lot of people get KO'd in a bad market, right? And I think that's because of the bad behavior and the bad habits they had via a good market. So I think the mindset behind it's very important. Certainly for myself, I was able to retire from the workforce in the middle of the GFC. Most people were scared of their jobs. Most people were fearful of their jobs. And I was trying to be made, what do you call it? Not redundant. Yeah, redundant, right? I was trying to get a payout for being redundant, right? I was excited, right? And I couldn't get one, which was upsetting at the time. But, it's there was a lot of sackings during the GFC, a lot of chaos, a lot of economic turmoil, which did impact, a lot of areas of life. And a lot of people went broke and bankrupt, and bad decisions that got made and people couldn't afford it, etc. So in the middle of the GFC, if we go back, GFC, what was that, like 15 years ago, 16 years ago, 17 years ago now, long time ago. It just feels like it was yesterday. A lot of people didn't plan well from the years of prosperity. So from about 2001, 2002, around the dot-com bubble, around the September 11 time, there was a lot of stimulus packages put in place, and that caused, a good 5-6 years of economic prosperity. But then, everyone was a hero. Everyone was making money. Everyone was successful. Everyone was doing certain things, but they never planned for a bad time that could occur, and they never looked at their worst case scenarios. A lot of people didn't have strategies, and a lot of people got burnt in that period of time. If we look at 2001, 2000, we had the dot-com bust. We had, September 11. There was, a lot of economic growth between 1990 to 1993 up until the early 2000s. And these are boom-bust cycles. And if we look back, and the thing I always think to myself is, if we go back to a younger version of ourselves, or go back to our parents or anyone that's around us and say, what would you have done differently? Would anyone would have been fearful of buying a property in 2008, 2009, 2010? They'd be like, yes, sign me up for as many as you could, right? And if you go back to the previous crisis, you'd be sitting there going, would you buy a property in the crisis of 2000? You'd be like, yes, sign me up to whatever you could, right? Could you put me back to 18% interest rates in 1992? Would you buy a property then? It'd be like, yes, sign me up for it, right? But I guess the people that got wrecked in those markets were the ones that didn't plan, that didn't prognosticate, that didn't foresee what the future would be had for them. So, I always talk about the cash flow, the equity, and the growth, the three things that I've always talked about, buying at below market value, making sure it's got a positive cash flow or neutral cash flow at least, and making sure that it's got room for growth to it. And I built that strategy going through the GFC because I was concerned about losing my job. I saw people going bankrupt. A lot of people didn't realize, like every second house in Western Sydney, let's just go back to 2005, right? There was a crash in Sydney, in the Sydney property market between 2003, 4, 5, 6, 7. That was pre-GFC. What that crash looked like is, in Western suburbs, every second house had a white piece of paper on the front saying mortgagee in repossession. Interest rates were 8%, house prices were 200 grand, but the market couldn't support that sort of level of liquidity, and things were a little bit different in that period of time. So could someone go and buy a place today and be able to afford it? Yes, but at that point in time, there was a lack of certain things in the market. And I always thought to myself, if I lost my job and I had to work at Macca's, what sort of income would I be able to support my portfolio with? And for a period of time, my portfolio, it was neutral to start off with, and then it went negative about $40,000 a year. And that was like, wow, shock horror, right? $40K a year. And then very quickly, in a period of 2 to 3 years, my portfolio went positive by 50,000 a year. So it went way in the positive. And what happened is when the GFC arrived, it was more painful before the GFC than when the GFC came, because in the GFC, the central banks, the RBA of Australia, dropped the interest rate from 725 basis points down to 300 basis points within a period of 5 months. So an interest rate that was at 8.5% was back down to 4% sort of thing. So with the balancing of two things, one, the rents were being pushed up. There was a pent-up demand. So there was a lack of new stock coming in the market because builders were going broke like they are today. There was migration coming through because we need more taxpayers. All the same elements that sit in the market today occurred when the GFC occurred, right? And at the time, people were fearful. They were seeing share prices fall. They were seeing businesses fall. They were seeing people fall, and a lot of negativity in the news, and people were fearful, right? If you think back to February, March, and April of 2020, when Corona first came out, right, who'd ever been locked in their house beforehand? You know, it was a very strange time, and people were fearful. But I saw at that period of time, and I made lots of videos about it then, that the opportunity of them printing money. They made interest rates 10 basis points, never seen beforehand, right? At 10 basis points, it made everything cheap. And all these heroes came out to the market, right? Everyone was a hero. Everyone was an expert. Everyone was giving advice. And, everyone thought they could make money. And were their strategies right? Were their fundamentals right? Were their, planning, was that done correctly? Had they sort of planned for a worst case scenario of this, that, or the next thing occurring? And a lot of people didn't, right? And if we look at the market today, are we in a bad market cycle or whatever? I think we've got, normally you have poor people, you have middle class, and then you have the rich, right? The poor always get burdened and pushed down, and the middle class and upper class are the ones that benefit. However, in this time, something different has started to occur, and the pressure has fallen on the middle class as well. So the poor and the middle class are getting squashed in this market cycle. But there's some people that are becoming very, very wealthy from all of this occurring. And, you want to change yourself from in the middle class. You want to be pushing yourself up the levels of life financially and whatnot. And, the world is very different. I've said this for many years. You need to understand how money works, right? That's fundamentally what is happening out there. This is all just money transactions and things that are occurring. So you need to understand how money works and be able to navigate through those markets. So is there an issue occurring at the moment? I'm feeling that people are pushed into certain segments of those markets. That's putting more people into the cheaper ends of property markets. If you look at property markets, they're taking off, so it's impacting the poorer people as well. When I say poorer people, I mean the affordable housing segment is being pushed to extremes because it's being inflated, right? And folks like you and I are benefiting from that because the rents are going up, the prices are going up, and all of that stuff. But there is some segments of the market that I'm seeing out there. And this morning I'm negotiating on 150 units in a bulk deal, right? A developer in a bit of pressure. I negotiated a deal the other day, which was 27 units in a blue chip suburb of Sydney, right? And I fucking kid you not, right? I'm looking at 420 to 450,000 a unit, where these things were selling a year ago for $900 to $1 million a unit, right? This is a developer that's gone into administration. There is building issues out there, but there's opportunity, right? These builders wouldn't have been in this position if everything was as per their plan, but they hadn't planned for these occurrences to happen, their funding to go up and building costs to go up and inflation to go up and all those sorts of things. And that's where they're stuck here. So there is opportunities within any market, right? In a good market, you just buy anything and it's going to take off and you're going to make money out of it, right? That's a really dumb way to be, because if you're just hoping and praying and getting something and the market's going off, you're not adding any skill to the game. But if you can find opportunities in markets like now and find the glitches, it's like, how do you take advantage of them and how do you benefit from them and how do you bring that in for you to be able to take part of, right? And I think having the right strategy in place is very important. What is your strategy? Everyone's strategy is different. Some people want to buy a block of land and build a house or a duplex or a block of units. Some people want to just buy an already existing property, right? Some people, like myself, I don't care what it is, right? It's a unit, a singular unit, a block of units, a house, a pub, a motel, a shopping centre, whatever it is, right? As long as the numbers stack up, what do I need in my portfolio to get me to the next stage of where I'm heading to, right? What is your strategy? What does it look like? How are you going to benefit from a market like today, right? What measures have you put into place to ensure that your portfolio is a recession-proof portfolio? So I've always lived with the fear, right? When I started building my property portfolio, I saw the pain out there from people that were going broke in, different sort of markets, right? Like interest rates had risen, lots of issues back in 2005, 2004, 2006, 2007. And I always had that fear. It was like a gun to my head. I never want to be like that person that just went broke. And I want to be like the person that I'm buying this property off. I reckon out of my first 25 properties, it took me 25 properties to retire from the workforce. And in my first 25 properties, I reckon at least 15 of those properties were properties that were bought for less than what the owner had previously paid for them 5 years prior. And they were properties where the owner had gone into some sort of receivership, bankruptcy, bank repossession, mortgage repossession, right? And that was prior to 2007, right? 2008 with the GFC was there. So do I look back at those properties and think to myself, they're a bad property? Things I picked up for $100,000 are now worth, $700,000. So they've done great. It was just that the person's strategy wasn't right to take them through that market cycle. They either paid too much for the asset, they didn't have enough cash flow to hold on to that asset, or a range of different other reasons. So, looking at the market today, I'd love to sit here and say to everyone, we're in a recession, which I think we are in a recession. Time will tell and common sense will prevail on that front, right? But it doesn't take blind Freddy to go out there and see. And I said years ago it would be a hyperinflationary depression that we'd be entering into. It would be a depression that people can't afford shit, but hyperinflation because everything would be so wealthy, right? So I'd love to sit here and say, hey, there's opportunities out there like that. No, there isn't, right? This is a market which is very, very odd because they are printing money. People have a lack of confidence in money, and there's still a lot of wealth out there to be had. So there's a lot of markets around the country at the moment where properties are hotter than what they were 2 years ago, 12 months ago. I was just chatting to someone today. They bought a property in the Gold Coast in September last year. So it's like 9 months ago, 6 months ago, 8 months ago, whatever it was. And they've revalued the property for $150,000 more than what they paid for it, right? Only 6 months ago. And apparently the interest rates are the highest they've been for 10 years or whatever. So you've got to look at it and think, okay, if we don't have a recession, could there be a recession? Well, we are in a recession, but we haven't seen it spill over into property. What would it take for property to start collapsing? What would it take for us to pick up bargains? Are there going to be bargains out there? I don't see it, right? I don't see it. That deal with 150 properties that I was talking about today, it's an off-market developer sort of deal. I laughed and I smiled and I was so happy, right? Because I was like, I haven't seen one of these sizes for quite some time now. A lot of you might remember back in about 2012, I was in the Gold Coast. I picked up a block. It was a block of 700 units in Southport. I bought these units distressed off a bankruptcy. It was a very similar time, right? That was 2012, right? There is glitches in the market. The only bargains that I'm seeing out there are deals that are on massive scale because there's no one at the top end of the market to pick up and absorb that stock. So buying a bulk deal of 20 units, 50 units, 100 units, 200 units, there isn't a liquid amount of people there. It has to be a fund, a BlackRock, a Vanguard, one of those sort of entities or someone that's got some serious cash backing them to be able to get into a deal like that. So if you can try and capitalize on that market by being a part of a bulk deal, fantastic. And they come in all different shapes and sizes. It's just a matter of finding that opportunity. But I do see in times like now, right, if we're in an economic crisis back in 2007, 8, 9, a lot of people couldn't afford to buy a property. Interest rates had gone up. The cost of ownership was hard. cost of getting into the deal was hard. There wasn't liquidity splashing around. So a lot more people were pushed into the rental market, and that caused rents to double, right? I remember sitting there going, shit, my position just went from 50 grand, 40 grand negative to 50 grand positive in a period of a year, 24 months, right? And I was like, that was enough to see me retire from the workforce, right? So was it all bad at that period of time? No, it was by luck and by chance, but I'd put all my stop losses, all of my protection points in place to ensure that I could capitalize on that. I wasn't banking on it. I hadn't locked it in. I just went, okay, that was great, right? It happened. But a lot of people in the last few years, because it's been so easy to make money out there, really, they're just printing money and throwing it around. People have just been like, oh, no, this is how it's going to be. This is how it always is. I speak to new investors today, and they don't think about what happened 5 years ago, what happened 10 years ago, what happened 15 years ago, what happened 20 years ago. And, will all the things happen over again? I don't think they ever do happen and repeat themselves, but things are different, and it's different crises that are caused from different problems and different, steering of the ship that leads, probably a bit bad to say because of that ship that crashed yesterday. But, you need to be taking that vessel to where you need to be. So if I look back over the years and look at the problems and the opportunities that have been there, I don't like this guy, but I think he says it pretty well. Warren Buffett, when he says, be fearful when others are greedy and be greedy when others are fearful, right? And you want to look for the glitches in the markets. When I look at the Gold Coast, right? The Gold Coast, we were picking up 50 properties a month for our investors for 7, 8, 9 years between Tweed Heads and Caboolture sort of area. And we were picking up properties there for 150 grand, 180 grand, 200 grand. People used to laugh at me. 130 grand in Logan, right? And people were like, why would you buy that shithole? Why would you buy in the Gold Coast? Those things haven't gone up for, you're buying them cheaper today than what they were 10 years ago. And I'm like, that is the opportunity. So we're picking up units for like 150 renting for 280, 200 renting for 350, that sort of stuff. And we look back now and they're like $600,000 a unit and they're renting for $700 a week. And, it's great, right? A lot of people have become multimillionaires, they're retired, all that sort of stuff. So people have taken advantage of that soft market. But to go out to the market today, a lot of people are going to the Gold Coast going, I'm going to buy in the Gold Coast, right? And the next hot spot is Perth, right? Everyone's going to be a hero and go to Perth and make all this money. I was buying properties there for half of what you are today, right? Looking back, everyone's going out to jump in his market. That's great. They're going to drag the pricing up, right? They're going to be taking those prices up and the asset prices to where we need them to be. But to be participating in that market, I go in there with a lot of risk and fear and a lot of caution when I'm buying those sort of assets. And the numbers have to stack up. If they don't stack up, I won't do them. So, work out what your plan is. Work out a game plan on how you can capitalize in any sort of market. I've sat on podcasts and Facebook Lives over the years, laughed when I've seen economic issues. And people are like, why are you being so condescending? Why are you being so rude? Why are you being this? Why are you being that? And it's like, I see the opportunity, right? I see it. The writing is on the wall, right? So we sit here in 2024. What are the risks that we're seeing? We're seeing global recession. I was going to say depression because it will end up in a depression. I coined the term in 2018, the global financial depression, which was coming. And I expected it to be here before now, but they printed their way through 2020, 2021, 2022, 2023. But that depression will come, right? And they'll either come from massive deflation or massive inflation. If there's massive deflation in the markets, everyone goes under. Just think about it this way, right? The banks control everything, right? The mega corporations control everything, yeah? If we see deflation cripple through there, right, whether we see a chocolate bar go down in price, whether we see fuel go down in price, whether we see house pricing go down in price, that will cripple the power structure that's in play, right? If we see a house price drop by 20%, right, just think about any house that's been bought in the last 5 years and it goes down by 20%. If a property goes down by 20%, then the banking system would be in negative equity. Don't worry about yourself. Who gives a shit about me or you, right? Think about the whole financial system, right? The whole banking system starts going into negative equity. So that would have a massive downplay into the financial sector, which is the controlling structure. So we need to look at what options do they have and what triggers will they play? And they've tried to stop a hyperinflation from occurring by pushing up interest rates, taking money out of the system, and starving off the inflation. But that's causing more inflation. They haven't been able to stop. The genie's out of the bag. It's doing what it's doing. And it's inevitable that the system can't sustain where it's at the moment. It's obvious, the writing's on the wall. This video may age very bad, but I don't think it will, because I think that it's evident that we're going to start seeing a reversal in monetary policy. And because of all the things they've put in place to try and stop the inflation, they're going to have to reverse their whole ship and turn to a different direction. They go, no, this ain't working. Shit, we've got to get out of here, got to get out of here, got to get out of here. And they will have to drop interest rates at a rapid rate. So when that day comes, what will happen at that point? We've had no building because all the builders are going broke. Inflation's too high, so the cost of goods is too high, so that hasn't trickled into the property markets. We've had to bring migration in, right? We can't breed enough tax slaves quick enough. We need to bring migration in so we can have tax slaves here in participating to pay our debt and service our debt. So that is causing a pressure on our current infrastructure. So we've got a supply and demand debasement happening, and we've got a reversal in monetary policy, which will create massive liquidity going into the markets and a need for all these new properties. They're not going to build a property. Why would they build a property for $1 million when it's only going to sell for $500,000? So they have to reinflate this bubble, right? But the bubble's still inflating. It hasn't deflated, right? So if we look at the economic pressures that are around in 2024, what do they look like? High interest rates are a pressure. Financial markets, job losses, unemployment, rocky financial markets around the world. The banking system is on a dialysis. It's in palliative care, right? It's a vegetative state. The banking system is on ice, right? It's there hooked up to the machine, and that's how it's running at the moment. When something goes wrong with that, we're going to need a lot more to fix it, right? And we started seeing massive banks failing in 2023. 2024, I think we're going to see the fallout from what they sticky taped together in 2023. And I'm not saying this as, let's be scared. Let's be, I'm so optimistic. One of my goals this year, and I've tried to condense my goals for 2024. And my goals are always a to-do list, right? It's just like, let's go here, let's go there, and reverse engineer what I need to do to get there and make them baby steps as all my goals are. But one of my goals this year is to get 100 new investment properties, right? 100 properties at $200,000 a piece. $200,000 a piece properties are becoming a thing of the past, right? They're still out there today, but when they drop interest rates, rents go up, these things are going to be like, wow, they never existed. How did you ever buy a property for under $500,000? How did you ever buy a unit or a house for $200,000, right? That's going to be a thing of the past. Opportunities there. You can either participate in it, you can sit there and go, we're going to wait a year and see what happens, but it's going to be too late. You can't, the average investor can't just go out one day and say, we're going to go and buy 20 properties today, right? It's too late to go and do that. So, it might take you 2 years to buy 20 properties, right? This is the time you want to be collecting the assets to be able to take through that cycle, in my view. There's always a good and bad time to buy things. A lot of people are fearful because they just have one blanket cover. If we look at markets, just for example, right, I'm not saying buy in either of these markets. If we look at the Melbourne market's falling in price in 2024. If we look at the Gold Coast, it's booming in 2024, right? You have two very different types of markets there. We've got Perth. Perth has gone up 50% in a lot of areas, right? And those that have been investing there, those that are trying to invest in there, you will see that in the last 12, 24 months, literally properties have doubled, right? Is that the smartest, wisest move that you'd be making today, buying into an extremely hot market, right? There is opportunity still out there. I'm buying there personally. My clients are buying there personally, but we're buying with caution and buying with all markets in place to protect for whatever market we're going through. Cash flow, capital, protection of your capital as well, and growth on your assets. They're the factors you need to put in play, and you need a nice roadmap and strategy to be able to get there. So on that note, folks, I'm going to wrap it up today before I start going on tangents. But great time to be alive, great opportunities that are out there. yes, there's fearful times. Who would have thought, right, in all the fear of start of 2020, like I remember sitting there going, fuck, this is the opportunity here, right? This is the opportunity. I wasn't so excited afterwards, right? A year after that, I wasn't so excited. Everyone else was, but they're like, oh yeah, I've just made money. I better buy property, whatever. It's like, I don't want to participate in those markets. I want to participate when everyone else is depressed. So move wisely, do take action. The last 21 years of me investing, being a property investor, I've seen lots of markets that have been shit. Every year I could tell you the shittest market in the country, and I could tell you the market where the best opportunity was. And there has not been one year in the last 21 years that I have not signed a contract, bought a property, or made money in the property market, right? There's always going to be opportunities, there's always going to be risks. There's going to be lots of things happening out there. You need to make sure you're minimizing your risk and you're taking advantage of all the opportunities that are there in front of you. So on that note, folks, I just want to wrap it up. Thank you for watching this week's podcast. Make sure that you like it, share it, and you tune in every Thursday, Google Play, Apple Play, Spotify. If you need help with us here at B.Invested, reach out to us 1300 367 925. Hit us up at admin@binvested.com.au. Have a great day. Bye for now.
Like Bilal said, man, we stuck in the matrix. This my advice, don't care if you take it. The dollar about to die, soon to be hyperinflated. This my 2 cents, don't care if you save it. Join be decentralized and you will see you been lied to the whole time, and it's the irony, cause they do the exact opposite. You become a slave to the system, enough your money, all they do is profit. There's no conspiracy theory, you better hear me. Crypto will set you free before the system does. I don't care if you do or you don't, but what I'm saying is the truth to the reason you choke. I've never been a failure, excuse my behavior. Keep talking, haters doing me a favor. And you're telling lies, I know what they been telling you. I'm the opposite, the Donald Trump of Australia. It's amazing, here for the taking, my time is never wasted.